Here I'm going to break down the anatomy of an 80-20 scenario. Okay. What's up, everybody? This is Ryan Carthage of the Forex Trade Room coming in with a hot trade setup opportunity. This is a key setup this week that I want all of us to keep our eyes on. And if we get our confirmations, we'll look to enter this trade to the downside. So I want to start at the monthly time frame and work our way down to the 1 hour. I'm going to keep this video super short, but straight to the point. Okay. So here on the monthly time frame, you see price pushed into the 618 retracement level. Okay. 618 retracement level is a key zone for us to watch when we look at reversals from a higher time frame and from a lower time frame perspective. Okay. So price pushed into that 618 retracement level. Okay, so we're looking for a potential reversal opportunity. You see we're starting to get a reaction now. All right, so as we move through the time frames, we'll drop down to the weekly time frame. And here on the weekly, you have a similar look, right? Price is pushed into the 618 retracement level, and we're edging up to this weekly resistance level. Okay, I've already put in, right, my resistance levels, and we're edging into this weekly resistance level here at 146459. Now, this is potentially a longer term trade opportunity, but when we get down to the lower time frames, we'll look at a shorter term options for us for entries and exits. Okay. So now as we move through the daily time frame, you see here prices pushed to the upside, broken key levels, and continued rising. Now we haven't had a pullback yet, right? This was our last pullback here at 137.301, and then price extended to the upside. So we call this an overextension. Price hit our matching de-extension and just continued rising. Okay, so in these scenarios, price is starting to get exhausted and slow down, which you're starting to see here, right? So these are key opportunities for us to look for reversals in the market. Okay, so as we drop down to the 4 hour time frame, okay, an 80-20 is when you have a shallow retracement. A shallow retracement is considered anything less than a 38.2% retracement on the fib. Okay, anything less than that is considered a shallow retracement. Now, 80% of the time, what we've seen is that when you get these shallow retracements, price will push into this 118, 127 zone and stall, right? Could push a little bit higher, but it will not get to the 1618 de-extension level, right? It'll get in this zone and it'll stall. And then it'll give us a retracement that will be at least to that 38.2% or deeper, okay? And that's what this shows us here is the potential reversal opportunity down into our retracement levels. Okay, so 80% of the time we see that. The other side of it, the 20% of the time, momentum in the market will be so strong that price will just push and extend to the 1618 extension level without giving a retracement, right? But 80% of the time, you get this reversal down. So this is what we're looking for here on the 4 hour time frame. This 80-20 scenario potentially play out. And we're looking for price to start making its way down to at least that 382, potentially down to the 618 retracement level or deeper. Okay, seeing as on the weekly time frame, we had a 618 retracement. And on the monthly time frame, we also had a 618 retracement. Okay, so as we move down to the 1 hour time frame, we have our trend lines drawn to the upside. And you see here on the 1 hour time frame, we have some confluence, right? We have our active AV boundary. We have another shallow retracement. Price pushed into that 118, 127 zone. And now it's starting to try to turn over. Okay, so price is trying to turn over. What we want to see in order to enter this trade is we want to see a strong bearish break of the trend line, break and close. Right? If we get a strong bearish candle, break and close below the trend line, at the close of that candle, that will be our entry opportunity. Okay, that'll be our entry opportunity to then get short. Now, once I get that candle break, I'll look for my entry. And then I'll look to get short at least to that 382 level, potentially deeper. Okay, so that trade setup looks like this. This is our potential stop loss. Right? That's what we're risking, and this is what we're gaining. Okay. Now, this trade has the opportunity to go deeper than this. Okay, so right now this is a little to that is 143 to theirs 185. That's a little more than a 1-to-1, right? This trade will likely move deeper than this and at least get to that 618 level, and that's 325 pips. Okay, so we could be looking at this trade moving to that 618 retracement level, like so. Okay, so that'll give us the ideal 2-to-1, 3-to-1 scenario, right? 142 pips risking for the opportunity of 310 pips on the gain, right? So greater than 2-to-1, almost a 3-to-1 trade risk to reward opportunity here. All right, so this is the setup. This is what we're looking for on the EURCAD opportunity to the downside. Wait for a break of that trend line with a strong bearish candle, and then enter the trade. All right, so please don't forget to like and subscribe to the channel. We want to bring you more content like this. Let me know if you like this. Let me know if you take this trade setup. Also, if you're interested in a community that is about the growth and the success of people, consider joining the inner circle. Right, we've created this community to be one that is supportive and encouraging to each other. We meet 8 times a week, once on Monday morning for a Mindset Monday session, 6 times during the week, Tuesday, Wednesday, Thursday at 6:30 a.m. Eastern Standard Time and 9 p.m. Eastern Standard Time. And we meet on Saturday from 7 a.m. to 10 a.m. Eastern Standard Time for our weekly ritual, right? We bring tons of value, we have tons of engagement, and you have the opportunity to get feedback on the trade opportunities that you see in the market. So consider joining us on the inner circle. Until next time, you guys, have an awesome day.